following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi, folks. This is Basil Chapman, not Larry Pesavento. My pleasure to be sitting in for Larry. Great honor. And I had to hunt around for a really big set of shoes here to be able to meet that standard. But anyway, here I am. And this is the Tuesday edition, Tuesday, May the 3rd. And let's get right to the market. Let me go to the E-mini, and that's what Larry usually looks at. So we've got the futures up, and I want to get the daily, and I'll show you exactly. So in the Chapman way, let me make it real easy. ESM 16. We look for 4 higher peaks, and that essentially is where from a low bar, most identifiable low bar, that essentially tells us that at that point, other things can happen. And what we got in the last rally in the E-mini futures is from the low that was made on the 24th of March at 2012-25, we ran up to a peak A. I'll give you the numbers. The peak A was on the 30th at 2064.50. Any time that there is a lower high bar, it sets in place a peak. It doesn't matter whether that increments of 25 cents. It doesn't matter whether it's 25 cents or more, but under 25 cents, it becomes a peak. So we got a peak for one day. The very next day, there was a push above it, 25 cents above that 64.50 area. That started legs B, and that becomes a floating ladder until there's a peak. And that turned around at 2,071.50 on the 2nd of April, pulls back quite sharply. It goes down to the 2026 level and then rallies. The moment it breaks that peak B of 2071.50 by 25 cents, it starts leg C, and that started on the 13th of April, goes to the 14th, and then the next day, 2081.75 doesn't get beaten, it's 2080.00, and that becomes a peak C just for one day. And whoosh, takes it out the following session, and we go to a high, and that's the high of 2105.25. It is the high for now. In my work, I also use other technical factors besides the Chapman wave notation. And that black line that you see on the left here, this is the daily, this is the weekly, and I've got the 120-minute chart here just to show you something near term. And what we're looking at is when it went on the 20th to that high in the following day, even it doesn't matter that it was a big, deep red candle touching the 9-period moving average, that black line. What we're looking at is a lower high bar. The whole bar was higher, 2104 instead of that 2105 area. So that becomes a peak D. But we don't know whether there's going to be a down arrow. The down arrow always implies in my work that it is a sharper decline, but it could immediately turn. So what we're looking at is that testing of the 9-period moving average that occurred for 1, 2, 3, 4 on the 5th day. That's last week on the 28th when the market opened at 2092.50, went a tad high to 2094.25, and then plunged below the 9-period moving average and had 3 more candles after that under, with the MACD, the moving average convergence, lower and the stochastic lower. What we would see is we've gone from a sell signal to a sell mode. That's a description. It doesn't say, oh, you've got a sell mode, that means you're going to go much lower down. It usually implies that, but basically what it says is now you've got to be very careful because there's a greater chance, especially if the price keeps holding below the 9-period moving average, that you're going to go even lower. Okay, now look at the spectacular 17.3% gain in the, and this is really unusual. I don't think I've seen, that's the biggest point gain we've ever seen in basically a single leg in the futures of the S&P. That I just don't know how we could have done it any other time. So we've gone from 1794.75. That was that low that was made in March the 12th, March the 11th, I believe. And we ran all the way to the high of last week, 2 weeks ago, to the high of the 22nd of April, week of the 22nd, to 2105. That is a huge move, and it's a 17.3%. You can expect some kind of a digestive phase. Okay, so now we've got that. This is the 120-minute chart. It went to peak A, peak B. It's still a peak B. It hasn't broken down yet. The support that I mentioned to my subscribers, to my opening calls, my intensive daily look at the market for my subscribers, showed that the 2055.50 low area of the May the 1st, the last day of April, that's going to be very important support. If today we take out the low of early this morning of 2057.25, that's going to suggest that we go even lower. Right now, we're quite ready to have a little bit of a bounce. You'll see that in the 10-minute chart. I'll show you ESM 16. Look, here's the 10-minute chart. There's a left side, right side price time match, and that says that by 9:40 this morning, there should be an attempt to get to 2063.50. Right now, we're at 2062.50. So we're starting to climb. One little pop above that peak B stars leg, C in the 10-minute chart, and I'm going to put, at least for now, I don't see any reason why not, an up arrow, and that says there's some residual strength that we're looking at right now, and it should go a little bit higher. So that's looking at the Dow. Now, looking at the E-mini, the June futures contract. Now, what's really important about this, now, of course, Larry looks at Gartley, he looks at the butterfly patterns. He looks at those triangles. He looks at where resistance is coming at the 3.618, 1.618. These are all levels that you'll be able to see here, but I do not have those patterns as an automatic system. So when I'm looking at this, I tend to look at triangles more in the shape of a cup or an arch formation. And you will find, for instance, you can see there's a triangle and it's going to that triangle over there. So yeah, this could be ready for a little bit of a bounce, but the dia, I think, is cast on the daily in the Dow, the S&P, in all the indices. And essentially it's saying that at least in the daily charts, I haven't got anything yet on the weeklies because the weeklies are so strong. Look at the way above 80% is very good. Above 90% is outstanding in the stochastic. This is called the slow stochastic, 14, 3, 3, 1, and 20% and 80% on the levels. And we're at 91.30 in the weekly chart. Of course, we've only had one day. We haven't even had the second day yet of the week. So it is saying very clearly that a push above 2105, I haven't typed that in yet, 2105.25 would essentially, 2105, would essentially start a leg B to the upside in the weekly chart if it happens this week or next week. But a pullback below 2042, that's the 9-period moving average in the weekly chart of the E-minis, would essentially say, hey, be careful. This is a digestive period. And that's kind of what I think is going to happen. I'll be right back. Basil Chapman sitting in for the one and only Larry Pesavento.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman's. I usually have my Tiger Technicians hour. That's at 11 o'clock, but of course, it's my pleasure to be sitting in for Larry. And a couple of things I want to just mention here. And the first is, within the context of what we're looking at, there's a technique that I use, and we can see it in the dollar index. We discussed it yesterday. The 18th of March, the dollar went to 94.58 low, bounced all the way to the 96.40 level on the 28th of March, then turned around and made an inverted V or an H, lowercase h pattern, took out the left side low. And what I said in my program, as it was happening, was if the dollar could not close above 94.58, that's that March 18th low, within 2 sessions, there's a good chance it'll just continue lower. Well, it did that. It kept going low. You see that black line, that 9-period moving average, what a beautiful resistance level. And then all of a sudden, what we saw was on the 12th, it started another bounce, and it made like a lowercase h that turns into an M or a larger H pattern or arch formation. Once again, I said, if the dollar cannot within 2 days close above 93.63, there's a good chance it's going to go even lower. And now it's at a low, and you can see the stochastics just made a little V-shaped attempt to turn around. Day's young, so we don't know if it's going to cross positive. The MACD has got a very wide beta, very wide distance between the red line, which is the slow-moving average, and the green line, let's call it the faster-moving average. It's the 9-period differential. And you can see the histogram still very negative. But the way the dollar's acting and the way it was acting this morning, I had said from yesterday into today, I told my subscribers to my opening call, my daily newsletter, I said, there's a good chance that the dollar could actually have a bounce now. If it does have a bounce, and it is a leg E in the weekly chart, 92. It hit this morning, it hit 91.92. That means it's pierced the left side low. This is really a critical moment. Why? Because in the weekly chart, it's the same story. You see that H pattern that's forming there from the 92.61 low back in the week of the 28th of August? We've made a full recovery and reversal, going to 100.51. In my work, this cup formation says, cup and failed handle, says that going just 12 cents above the high of March of last year should have been what I call a Chapman wave cup and ladle break right through. Should have been at 101, 102 within the same month. And then we should be now at 103. Instead, we've reversed down. And my rule of thumb is in this cup formation pattern, I call it drop bucket formation, but let's just call it an arch double top formation, a cup double top formation. If the price pulls back more than 1/3, especially to 1/2 of the distance between the bottom of the cup, in this case 92.61, and the high of 100.51, there's a real good chance you're going to test the low, and that's exactly what we've done. Now what we're looking at is a pattern that says, yes, if you do form another cup formation, it better start right away, because if it was to break down even further, there's another pattern that could unfold, and that says that you could make a one-to-one decline from the top to the most important peak, which in this case is the peak of the week of the 4th, which is 98.58. So you could go down. I'll try to draw it on like messy charts. It's getting a little bit messy, but let me just do this, and you can see what's happened here. 1, 2, 1 would be right there. And that takes you to that level, which we've already surpassed. So this says you can get a second one. And that takes you to this level here. And that'll have to be from the peak there. And that takes you down to the 91.80 level, which we've almost done. So we went to a low today of 91.92, missed it by 12 cents. Now, it's an approximation, so it's real close. So as I see it now, and if you're looking at Elliott wave, this is 1, 2, 3, 4, and this is 5. And this is saying, unless there's a move now, a snap on the upside in the dollar that takes out the black line, which is the 93.58 level of the 9-period exponential moving average, which would get it above that 93.63, start to get it above 93.63 low of the 12th of April, the dollar is just going to make lower lows and lower highs. And the MACD and stochastic in the weekly charts, very poor. Let me get rid of this 120, and you'll see that the monthly chart suggests that there could be a move to 88.16. I mean, this is serious stuff. And I think that the Fed would very much like the dollar to come down. They're not that, I think they're not that interested in the rates. I think the rates are taking care of themselves. They're just not going anywhere. They're not doing anything much. It's the dollar. This is just my thinking. How do we really know? So I'm looking at the dollar. I'm suggesting to you that perhaps the dollar, let me just see the current 92.43. I've got 92.50. Yeah, it's right there. You see a nice candle. This could be a reversal candle. Now, why am I talking about this? Because the gold contract, look at this. It's made a leg E. I'm not calling this new A. This is an E. And there's a real good chance, based on the technicals, that there could be a minor pullback at 12.98. Gold trading up 260 right now. Let me double check. How current am I? Yep. And this is good because it's a leg E in the weekly. We've extended the left side, right side price time match. And the 120-minute chart gave, I had this notated. Yeah, the 120-minute chart gave a peak E top. In fact, I have to put a down arrow now because the technicals failed. Even if it goes higher, that'll be a recycle. So unless gold can really pierce strongly the 1306 high, round number high, that was made yesterday at 10 o'clock, I think that the whole gold, and maybe the commodity contracts are ready for some kind of a digestive phase, maybe a week or two. It could be a little longer, but I'm saying a digestive phase. Nothing very serious. Would I go short? I'm looking at the upside. I'd be very nervous about, for my subscribers, we have a beautiful index that has gold, it has crude oil, it has soy, it has sugar, it has natural gas. It's a beautiful thing. And I would like to keep that as long as possible. We got a lovely gain in that. But I'm sure that I had said to subscribers yesterday, if you're swing traders, take some profit off at that point. We're going to try to hold as long as we can. So let me go to the crude oil. CL, crude oil made a peak C. Now, this is going to be very interesting because I've got a little bit of divergence. I've got a peak E in the USO, which is a different, it's an ETN that basically, it's a fund, United States Oil Fund, which they attempt, I mean, as much as they can, to have it correspond to crude oil, but there are fees and all sorts of things attached to it. So obviously it's not going to be quite the same. But it is giving me a signal that says, yeah, I'm ready for a little bit of a pullback. I'm at 11.05. I could hit 12.46. I could even go down to the 10.46. I could even go down to the 980s and still be in a beautiful uptrend. So this is going to be very important. If I look at the, what was it yesterday? I keep meaning to write it down. That is the New York, the Harbor contract. Okay, I'll be back. And, we got Larry Pesavento online. I'll be back with Larry straight after this break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman sitting in for Larry Pesavento. But wait a minute. I believe we've got Larry on the line. Hi, Larry.
Looking good, Billy Ray. Feeling good, Lewis.
Very good.
Hey, thanks for setting in for me, Basil. I appreciate it. I'll be back on Thursday because I have Norm Winsky as a guest, and I promised him that I'd be back. So the only thing I wanted to bring to you, to bring to the folks' attention is two things. One is we have made the big ABCD weekly 382 retracement on the dollar index. That came in when the euro got up to 116 and change last night. And as you can see, it's had more than 100 pip retracement. The second thing, Basil, is in gold and silver. We're seeing a reduction in open interest in silver, which is very negative. This is exactly the same thing we had during the week of the high when it was 49.50 per ounce way back in 2011. And the rate of change of the open interest in gold is really turning over. It'd be like the stochastic going from about 95 down to about 78. It's really rolling over. There's no decrease in open interest yet, but it's not increasing like it should be if this were a valid breakout. So that's all I wanted to mention.
So my question to you is, so I've got silver in my continuous contract as making what I call a peak E, which says it's now ready, that this is the moment where it could turn down. The MACD is still strong, but the difference between, this is probably what you're looking at in your open interest, the difference between when it made the last peak on the 21st at 17.769 was that the MACD was expanding and the stochastic was pulling back a little bit, but it was still strong in the 90s. Now we've had a new recovery high going all the way to 18.06. That was yesterday. And MACD started to flatten out, but the stochastic is a lot lower. It's at 87. So I've got a decrease in one of the key metrics. But I tell you what I am looking at is in both in gold and in silver, the weekly charts are still very strong. So I don't know how that relates to what you're looking at.
Oh, there's no question that they're very strong, but, you know, we are overdue for a correction. I'm just bringing this to their attention because the last time we saw this, we saw, you know, a pretty major correction in gold and silver, so just be careful here about buying breakouts. That's basically what I'm referring to. But the dollar index is very, very important. That's had a huge move already this morning.
So the support that you're looking at is on the weekly or the daily of the dollar, the trend line that you're looking at?
You mean on the dollar index?
On the dollar index, yes.
Back to the one on 2011, that was the first 382 retracement. Remember when Tom was really talking about King Dollar, you know, back when it was around 75?
Yes.
We ran up to that 102 level or whatever it was. Or I forget what the exact level was. Then we backed off over about an 8-week period to the 382 retracement. This time, it's taken 15 months to make a retracement of that whole move from 2009. So I think it's really important to pay attention to it here.
Larry, if you're looking at this and if you were treating it as candles from the 100.39 high in the index, in the dollar index from way back in March of 2015 to the low, the very important low of August, down to the 92.61 level, the fact that it went just fractionally above that previous height, went to 100.51, and today it's gone fractionally below the low of August, essentially says that we've got a kind of an engulf. If we just treated them each decline as one candle, we would now have an overlapping candle. In other words, we'd have an engulfing candle because there was a slightly higher high and a slightly lower low. So if there was anything that was going to happen now with the dollar, I would suspect that there'll be at least a pretty good bounce. Now the bounce is, as the most important thing for me would be that the bounce has to close above 93.63, and it needs to do it fairly quickly in a V-shaped manner. It needs to do it, what's today, Tuesday? I'd say by Thursday or Friday, it needs to be climbing. If it's able to do that, then I think we've set in place a consolidation for the gold and silver and many of the commodities. That's just my thinking.
That sounds pretty good to me. I just want to thank you for having me on as a guest. You're doing a great job. Just don't do too good a job, okay, Basil?
Yeah, the guest of the guest, right?
All right, buddy. Thanks again. I appreciate it.
My pleasure. Thanks for calling in, Larry. We always appreciate that. Good. So, folks, that's very important what Larry was saying. So in a completely different way, you remember I was going through this myself earlier on, just looking at it based on the Chapman methodology, using some basic techniques, using the waveform. This is a leg D to the downside in the daily of the Dow. It is a leg E, and a leg E in a weekly chart says you are really close, not you, whatever it is you're looking at, is really close to at least a pretty good bounce. So the bounce says that it's no good just bouncing towards 93.58 and then closing under 93.58, 93.63. That's the level of the 12th, the low in this arch formation. What's really important is that if there is a move to the upside, it needs to start today, in fact. And you need to see gold and silver and even possibly crude oil. You need to see them start to move down. And that would be pretty much all the commodities. Look, I don't know if it's going to affect, I'm going to look at wheat. Wheat has made a peak C and then plummeted basically, but it's holding quite well on the bounce. But look at corn, look at soy. Soy, this is the continuous contract, has gone to a leg E. But what is this leg E? It is really a move above the previous high of July of last year. Remember, we looked at the dollar, which made its high back in March of last year, and then came all the way back, and then made a new fractionally higher high, and now it's pulled back. This cup formation in the weekly chart says if the MACD and stochastic in soybeans continuous contract, if it holds very well in the weekly, you could in fact see a peak here. Maybe the dollar is going to be impactful for many of the commodities. We'll see. But most importantly, you've had some of these commodities independently move higher. High-grade copper has held well. It isn't fantastic, but it's held well. So this soy, and now we're talking about a mix of grains and metals and all that, but I'm putting them into the commodity area, and I'm saying that based on my work, the soy contract, leg E, says you could go a little bit higher at 104, let's call it 1050, but there's a real good chance over the next week or two that you'll consolidate between 1024 and 1010. And that would say that it will impact the weekly chart to make a peak C. High-level consolidation is possible. So this dollar, I'm considering right now that this is a dollar bounce, and that's the way I'm going to treat it. I just want to look at the EUR USD, and now the market has opened. I'll give you all the numbers in a moment. There it is. That's a single leg up in the euro-dollar currency pair, but it is leg D. It's the opposite now. We're looking at the upside. Leg D in the weekly chart, and it's still just an H going to an M pattern in the monthly. So euro dollar being impacted on the upside over the last 6-7 sessions. Now we're going to see whether or not it pulls back, and if it does pull back because the dollar is rallying, then you're going to see the euro pull from 1.154, test the 1.140 9-period exponential moving average. I'll be back. Dow's down 120. S&P's down 15. The comp index is down 14, and I'll be back. Basil Chapman, sitting in for Larry Pesavento. Trade what you see.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off.
Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Well, folks, we're back. Dow's down 140 now, and S&P's down 15. Very interesting market at this particular point. One of the reasons, let me just show you this chart here. I showed it yesterday. I'll do it again today. One of the reasons why I wanted to show this chart was to say, oops, not this one, it's this one right here. This is without any Chapman wave notation. This is just with some of the tools added. You see this move right here back in May the 20th of 2015 when the Dow hit 18,351. You see this fat red line? This is the 20-period exponential moving average. See the way the Dow just went right through it there after 1, 2, 3, 4 sessions, try to go sideways, and then 5, 6, 7, about the 7th and 8th sessions plunged further below the 20-period moving average. You see the move of November the 3rd at 17,977. 1, 2, 3, boom, fourth bar, strong move down. 5, 6, 7, bam, right through the 20-period moving average. Continues and then rallies sharply higher. That sine wave movement around the 20 moving average, look what happened all the way, lower lows and lower highs. But boy, whippy as anything. If you weren't short right there or just before it and were able to hold on, you got taken out, and then you got in, you got taken out, got in. But in fact, if you were in at a good level, you had the cover, you had the capacity to be able to say, I'm short, I believe that I'm going down. Not I'm going down. I believe the Dow, in this particular instance, this is the Dow chart, daily chart, is going lower and going to make lower lows and lower highs. But what is really important is that as you're looking at the charts, you're saying to yourself, this is really my cover. So when it's below that, that's good. When it's above it, I've got to be a little bit careful. But the idea is that it's going to keep, very seldom will it hold above the 20-period moving average, but it'll keep making lower lows. But here's the issue. I had drawn this rectangle, and that was really our target area. From the high of the 20th of April at 18,167, above the November high, but below the May high, all-time high of 18,351, what I was looking at was that if the pattern was to hold and we were short here, we could hold that short position, but we could add to it. And if we take it out, we know what's going on. Every bounce is a shortable opportunity. And at some point, you're going to be wrong because you're going to have a monster move to the upside, but then you just have to have patience and keep putting on this trade. The trade is not to be long. if you're more than short-term oriented in this case. In this case, we're more looking intermediate term, but I don't really have a time because I'm thinking 2-3 weeks from here. 2-3 weeks altogether, meaning that we're into the third week. Now that we've broken below the 20-period moving average yet again, I can say now from this point on, I am getting a match, and that says maybe it's going to be a longer period, and I don't really care because I've set up some long positions. If we take it out of long positions, we take it out with a profit, mostly with profits, and the short positions are working, and that's just the way it is. Most importantly, what I am looking at here, being short with my subscribers, we're quite heavily short the Dow, and we have other positions. But most importantly, what we're looking at is holding underneath this thick line, which is at 17,827, and the Dow now is down at 17,757, says we've got a little bit of comfort because the pattern is starting to match. That's all I want. I want a matching pattern. I want a template. I want some kind of a schematic that I can say, hey, I'm following this, and I'll know exactly what I'm wrong. And here's another thing that is it's startling. I mean, when Larry interviews Norm Lewinsky, he said, how on earth can he use whatever he's using to be so precise when he gets those calls right? When Larry gets those exact butterflies or the Gartleys or maybe the butterflies, and he picks out that exact point, he said, how on earth, what kind of technique, how does that work so well? Well, in this particular instance, we're looking at a pattern. And even though I had, you'll see it right here, even though I had in the Dow, based on the Chapman wave methodology, we had to use an alternate count, but eventually we got it right. We said that would be a leg G/C, and if there's a new leg up, it's going to be a leg D. And when the Dow went to 18,167 on the 20th of April, we were already short. And what we were looking at was the fact that at that level, when the Dow went to a high on the 1st of April, remember that sudden move up, it went to 17,811. The MACD was just about to turn down. The stochastic was lower, and yet there was enough residual energy. The tide said high tide on the 1st, but no one saw the sign. Oh, no, in this case, high tide on the 14th, but no one saw the sign. And the wave itself went higher, but the tide had already turned deep down. So that's what we're looking at here. And now we're seeing the result is that the 9 period, that black line was support all the time. And now it is resistance. Even yesterday, it went right to that line. Today, it went right to the line and is pulling back. So that to me says a bunch of things. Now, what's really interesting about this is that you've got a W formation in the weekly chart. So let me finish up some of the numbers and we'll talk about this W formation. Let's go to gold. Gold is GC. GC making a leg E, possible peak E. And I spoke about this yesterday. I showed those trend lines. Remember the trend line, Chapman wave inside track repellent zone. And there's the propellant zone. It was holding so well. It went all the way to the top. Now there's a chance with the stochastic at 84% and the MACD still strong that it might take the dollar a little bit of time to turn around, but I think the signs are that there should be some kind of a consolidation in gold. And it's based on this reading. And look at the weekly chart. You'll see the same trend line, but you can make it longer. And that trend line goes from all those tops back from March, April, June of last year. And then they come right in here and you can see that it's just hitting those lines right there. So I'm looking at gold possibly having limited upside now. More time, I think it's more time that we're looking at to the downside, but I do believe that gold might in fact pull back. Now I'm going to look at the XLF because the XLF is saying pull back sharply. I've got a peak C. I don't know how else to call that. There's no other way I can ascribe it to. It's a C. But peak Cs can fail if they're way under the previous highs, and that's the case here. So I'm looking at it and I'm saying, all right, that 200-period exponential moving average at about 2304 is going to be very important. It's at 2311. The MACD is turned down, stochastic's turned down. I'm going to offer this, and we do have a bank stock, and I got a feeling that we're going to be taken out of that bank stock, and that'll be a small loss, but a loss nevertheless, because we've got a small position in it, and we've made the parameters quite tight. But I was hoping, and hope is, there's really no place for hope in this, but I was hoping that this would just be a minor pullback in the bank index. And the XLF, which is financials, you can see this weekly chart. This is really nice action, but what did it do? It went right into the resistance zone, the downtrend resistance zone, that sell, that is the repellent zone. So Basil Chapman, Dow's down 178, S&P's down 20. I'll be right back after these messages. Sitting in for Larry Pesavento. Trade what you see.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So what we're looking at here is the W pattern. Triple M. I've got 4 bellwether stocks that I use. I've used maybe 20 years or more. GE, IBM, Triple M, and UTX. I have guest artists once in a while, DuPont and Caterpillar, but I actually haven't used them for ages, haven't needed to. These stocks have been really very helpful. Look at the W formation in Triple M, but it finally made its peak D, and that says it could pull back. and it could pull back and made a new recovery high, a new all-time high. This is E/B in the monthly, but the weekly is a D at 170.77. Just a mild pullback so far. Today's down to $1.38, but it's making the H pattern in the daily chart, and that suggests that it should pull back. 165.32 at the 9-period moving average support in the weekly, but really I think it's going to be coming down to about the 163, maybe even 161 area if this continues. GE has been very weak, and it's weak today. It's down 41 cents, making that H pattern, pulling back sharply. F/C in the weekly. IBM is the third one. IBM, same pattern as H pattern, making probably lower lows. Nice move in the weekly chart, but it needs to pull back. We'll see how it can digest the big gains. And UTX is the final one. Triple M went to an all-time high. UTX went to a recovery high at peak E in the daily, turning down. How at 102.57, how it handles the 101s is going to be really important. My eye says probably at 99.11, 200-period moving average is going to be support. I think this is just a pullback, even though it's quite bearish in many aspects, but the rotational aspect says to me, that's why I said the XLF is so important. In my show coming up in an hour's time at 11 o'clock, the Tiger Technicians Hour, I'm going to go through these in greater detail. Just briefly right now, as we're about to wrap up, you're going to go to Tom O'Brien's update, market update, Everbank update, and then it's the Tom O'Brien and Tommy show, and then I'll be back at 11 o'clock. So you want to be watching the VIX index. The VIX index is now in the 16s. It's at 16.05. Over the 15 says selling pressure. Back under 15s, it says buying pressure. So I'm keeping it as simple as possible. So have a wonderful day. If you want, please listen to my show. I'll go into some of this in a little bit more detail with stocks, etc. And stay tuned for Tom O'Brien. Otherwise, see you later.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.